Hello everyone, Newborn Investor here and welcome to another video. Today we are back with another special purpose acquisition company, but this week's video is different from my other SPAC picks as this SPAC has not announced a business combination yet. I'm talking about Pershing Square Tontine Holdings Limited, ticker PSTH. So what makes this SPAC interesting? Does it make sense to invest in PSTH before we even know what we are buying into? We will answer all of those questions and many more in this video, so make sure to stick around as we're starting right now. Pershing Square Tontine Holdings is a special purpose acquisition company formed by hedge fund manager Bill Ackman. Ackman's publicly traded investment trust Pershing Square Holdings has delivered a 57% return through November 17, far outpacing the broader market. In March of 2020, Ackman turned a $27 million bet into $2.6 billion by using credit protection on investment-grade and high-yield bond indexes, a trade which is now considered to be one of the greatest of all times. So will Ackman be able to put up a similar success story with Pershing Square SPAC? Well, we have to wait and see, but in this video, I would love to share why I think PSTH would be a good hold for at least into the near future. But before that, if you like the video and find it valuable, please make sure to hit the like and subscribe button. I really appreciate your support as it keeps me motivated to put in the long hours for making these videos. Alright, let's move on. Ackman holds a stellar history in buying, building, and merging companies. Bill Ackman's track record suggests that he has the ability to make the SPAC work. In 2011, Bill's hedge fund co-sponsored Justice Holdings, a SPAC which went on to raise $1.5 billion, for which the fund provided 30% of the capital. Later in 2012, the SPAC acquired a 29% stake in Burger King and subsequently merged with Tim Horton to form Restaurant Brands International. Investors who bought shares in the SPAC locked in a compounded annual return of 19%. With Pershing Square Tontine Holdings Limited, Bill Ackman is incentivized to produce positive returns for his SPAC investors as his hedge fund Pershing Square has subscribed to the share offering and has provided capital for the SPAC. If the SPAC does not work out, it will reflect poorly on his fund's returns. So unlike other SPACs where sponsors does not have enough skin in the game, Pershing Square Tontine SPAC has the full attention of its sponsor. A stock warrant represents the right to purchase a company's stock at a specified price and at a specified date. In the case of PSTH, the sponsor Pershing Square purchased sponsor warrants for an aggregate purchase price of $65 million. Pershing Square has agreed not to transfer, assign, or sell the sponsor warrants until 3 years after the date of the initial business combination. These warrants have an exercisable price of $24 per share with a term length of 10 years. I consider this as a great incentive for company insiders to take the stock price higher. The stock is currently trading at $25, and in the worst case scenario, if the merger falls apart, the SPAC may go back to its offering price of $20 per share. So the downside here is $5 per share considering the current price of $25 per share. I believe the upside far outweighs the downside, and this is just my opinion. So please do your due diligence before investing. Legendary investor Seth Klarman, one of the biggest names in the investing world, has recently joined Pershing Square Tontine Holdings. Seth has invested around $400 million in PSTH, according to a new regulatory filing. Klarman's Bob Post Group is said to have invested around $397 million in PSTH with an average price of $22.69 per share. Klarman is famous for his discipline and value-style investing, and he joining Pershing Square Tontine Holdings is definitely a confidence booster for me. Several sources report a possible merger of PSTH with Stripe, the fintech company. The basis for these rumors was a Bloomberg interview in which Ackman said that he had limited discussions with Stripe on a possible merger. He also added that Stripe wasn't mature enough to go public. According to Bill, Pershing Square Tontine's most likely spot to find a target is in the private equity-backed universe, extending into fintech, consumer, and business-to-business sectors. So as of now, nothing has been finalized and rumors would stay rumors until an official announcement comes from the company itself. That being said, Pershing Square Tontine Holdings right now would be a pure speculative investment. You bet on the sponsor and their ability to bring value to the SPAC investors. In this case, it's Bill Ackman, and his track record gives me enough reasons to invest with the company. I certainly believe that investing in PSTH has far more upside potential than the risks. To mitigate the risk, I will allocate only a small portion of my capital to PSTH and would look to add more once the merger is announced. Now, I would love to hear from you guys. What do you think about the prospects of Pershing Square Tontine holdings? Leave a comment below with your answer and I'll be sure to follow up with you. Also, if you liked this video and found it valuable, make sure to hit the like and subscribe button. I really appreciate your support. So until you hear from me again, stay safe and thanks for watching. Bye.